So we're going to be looking at the configuration involving our, once again, it's our receivables application. Okay. Here is your basic overflow design of the receivables module. What's going to happen is that we've got the due. It's known as distributed order orchestration. So this is where we go out there and we do the basic sales order. They're going to go out there. Let's just pretend I have ordered some items from Amazon. I've asked them to go ahead, send me a financial book. They've booked it. Now they've gone ahead, they've picked it. They've identified their warehouse, told them to take it off the warehouse, and they've gone ahead and they've shipped it to me. Standard functionality, unless you set up contingencies, at the time that the items are out the door, Fusion treats that we've had a transfer of ownership. So I, as the customer, has ownership of the goods once the items leave out the door. Now, of course, there's other contingencies out there. There are certain circumstances that ownership or title to the good does not transfer over until I've actually received it and signed for it. So there's a lot of different strategies here, but out of the box, this is the basic strategy. Once it's been shipped confirmed, then what's going to happen is that we're going to have to go ahead, we need to pull in that information over into my receivables application. So that interfacing is affectionately known as auto invoicing. Then what's going to happen is that we get the invoice into the system, we recognize the revenue, we get the money, and then hopefully we don't have a lot of clients in which we have to send through collections. Then the final step is that money clears the bank, and then we're going to have a bank reconciliation. So this is what is affectionately known as the order to cash concept here. Okay. Now, our receivable process is basically made up of two steps, and I hate to say this, I know this sounds so simple. Receivables is all about processing the billing, invoicing, and then getting the money. That's its two primary functions. But anybody who's ever worked with receivables knows it's much more complex than that. So we get transactions into the system, and then what's going to happen is that we review the invoice transactions themselves. If needed, we can go out there and do a correction. Ultimately, we're going to send the invoices out to our clients. We collect the money, and then ultimately we're going to send all of this data over to the general ledger. So they're talking about, in order to get Fusion receivables to get processed, what must we have? We must have what are known as legal entities. All right, once again, every single transaction in our Fusion apps, payables, receivables, they're going to be marked with what is known as the legal entity. So we've got to define the legal entities first. Once we've got the legal entities in place, then we're going to do the chart of accounts. Once we've got the chart of accounts in place, then we go out there and we're going to define our ledgers, and we have to go out there and identify our foreign exchange rates and accounting periods, and we've got all that information that we've got to process. Then what we have to do is we're going to have to figure out, we set up our primary ledgers, we specified those ledger options, you know, what's going to be the first opening period, as we went through in the GL chapter. Then what we need to do is we need to define the business unit, because in actuality, when we define the business unit, we identify what's going to be the primary ledger. Finally, or not finally, but some other steps we have to do, we've got to define our transaction taxes. Does this not sound familiar to everybody? Is that not what we've been doing over the past few days? Then what we need to do is that they're saying, you know what, basically when you get that up and running, the recommendation here is that you define the implementation project. So we've got an implementation project for receivables, and then we have to go out there and we need to assign the role of implementation consultant out there to our individuals. All right, then what we need to do is that we've got credit memos. Now, credit memos over in the receivables module basically means I've got an individual, let's call this individual Tyler. He's ordered 5 items from us. Of those 5 items, one of them is damaged. He paid us $1,000. So basically what he does is that he sends us, or he notifies us that, you know what, we've got this damaged good. So what we're going to do is that we're going to set up a credit memo for a $200 reduction against his initial invoice. Okay? So when we were setting up credit memo workflows, since we are reducing the amount that is owed to us, it's probably a good idea to go out there and set up a workflow program to manage approvals. Then we've got the other common tasks that we've been talking about. We've got the descriptive flex fields where we may want to go out there and grab additional information. We've got our lookup list, we've got profile options, and of course we've got subledger accounting out there. So this is a pretty comprehensive list of things that need to get accomplished, and it's pretty much in the right order. Okay, so one of the first things, we're assuming that we got everything else in place. We got the taxes in place, we've got the ledgers in place. So now what we're going to do is that we're going to start the implementation. We're going to do the user assignments. One of the things that we did earlier in the GL is that we talked about reference sets. We saw where reference sets were actually attached to a particular business unit. And then from there on out, what we're going to do is we're going to be able to go out there and set up specific information in the receivables module, and we can identify whether or not it's going to be a specific reference set and whether it's going to be the common. We have all that entire strategy out there. Then we've also already earlier with your particular business unit, we went out there and we assigned the business functions there. Then we need to set up our users. We've got to assign them the appropriate data roles so they can work in the system. We've got to provision those roles, and then we're ready to go. Okay. And this is pretty much the same step procedure that we did over in payables and over in the expenses, over in the assets module. Okay. All right. So I'm just going to kind of like go through this rather quickly because I think by now you're fairly familiar with all of these steps because that's what we've been incorporating during the entire week. All right, what's going to happen here is that your data check, a reference data set appears by default whenever you create a business unit. That is false, okay? That does not happen, okay? We have to be proactive. We need to go out there and we need to identify. As a matter of fact, what happens is that the business unit, yes, we identify what the set is going to be, but you go out there and you actually, just because you set up a business unit, this is not going to create a reference data set for you automatically. It's something you have to be proactive about. Okay, data roles are created by default when you enable business functions for a business unit, and we know that to be true. We saw that over with the payables module. They're going over here and they're going to say my primary receivable business functions are revenue management and receipt processing. So they're just going through and they're asking you which one is going to be our primary business functions here. And our primary business function here is going to be billing and revenue management, okay, for customer payments. Right, so that is the correct response there. Okay, let's just kind of go through that. All right, so when we're setting up credit memos, we were talking about we need to set up a credit memo workflow. It's just, obviously, it's a safeguard. It's a validation procedure to set up an approval process. And they're letting you know that in our workflow, remember when we went over into the Beeple and we saw that they had some seeded processes over there? They're letting us know that they've got some seeded processes out there. One is going to be for our collection agent, and one is going to be for the non-collection agent rule set. So remember, in Fusion, there has definitely been a distinct demarcation between what is a billing process versus what is a collection process. So we're looking at the fact that, you know what, we need to make sure that we've got an approval process in place to handle potentially both sides of the equation. Then what they're doing here is that these two seeded rule sets, what's going to happen is that we need to go out there and work with two approval groups, and they're letting you know that these approval groups need to be going out there and need to be set up. Okay. So all that's what they're doing is they're going out there and they're saying, okay, we've got these two credit memo workflows, but then you have to go out there and set up the approval groups to go out there and work with it. Okay, subledger accounting. We've already been through the subledger accounting. They're talking about the accounting methods, and you know what, we did that the other day. We went out there, we created a subledger accounting method, we talked about the event model. However, the event model we were discussing was on the payable side, but once again, the event model for payables is all about paying the vendors. The event model for the receivable side is all about collecting the money. So once again, as I was mentioning earlier, your subledger accounting methods are subgroups within each subledger application setup. Now, okay. They're giving you, you know what, we've been through this loan model. Over in our world, when we're dealing with the, over in my receivables module, what's going to happen is in my receivables module, we're pretty much invoicing, receipts, invoicing, receipts. Under the invoicing, we're going to have what? An event class for standard billing invoices, debit memos, credit memos. Over in the receipts, what we're going to do is that we have the receipt itself, and we can have a standard receipt or we can have a miscellaneous receipt. And then, of course, we have all the activities that can be processed against them. Okay. All right. The accounting event classes, as we were talking about, these are going out there, and we've got event classes, we've got event types, and then we've got accounting classes. So all they're doing here is that they're just letting us know that for our event classes that we were going to have for every type of event class you're planning to use in the system, i.e. Standard billing invoice, debit memo, credit memo, you've got to go out there and make sure there's an accounting out there that's going to be associated with that. And we know about the event types. Event types are the activities. So on a standard invoice, I can go out there and set up what is known as, it could be completed, it could be adjusted, it could be canceled, and so those are going to be my event types. Okay. All right, and then what you do want to do is that when we go out there and we are setting up our implementation project, what ultimately we're going to do is that we're going to do the configuration, we turn on the features that we want to be working with, we set them up, and then theoretically your clients are going to set up their own implementation project called maintenance so that they can go out there and maintain some basic data as the company grows over time. Okay. All right. All what's going to happen here is that when we're going over there, you're creating your receivables. They're letting you know that we have to have at least 7 tasks to get completed as a minimum. You've got to set up your system options. We've got to set up receivable activities. Receivable activities handle a variety of special functions in the Fusion receivables. They can do some of the adjustments that we might have to perform on a billing transaction. They can go out there, they can be part of our strategy of identifying miscellaneous cash items coming through, such as interest income. They can also represent an expense, such as a bank charge. So receivable activities have a multiple functionality within my receivables application. We've got to define what are called auto accounting rules. I don't know how you're going to indicate this, but somewhere you need to indicate that auto accounting rules are the default accounting. As we've been talking about with SLA, what's going to happen is that we've got the default accounting, then we create the accounting, and the SLA accounting says, do we accept the default accounting or do we modify it? All right, and we solved that with the SLA because what I did was that we basically saw that the end user put in one value for the credit memo, and then my subledger accounting rules went out there and replaced it. Okay. We've got to go out there, we need to set up what are called receipt classes and receipt methods. My receipt classes basically represent how do we get the money in. Credit card, debit, cash, however we're going to do it, and each receipt class is going to be associated with the receipt method. Each receipt method is associated to a bank, all right? So there is that relationship. If we are expecting our clients to go ahead and send us their money or remitting the items that are owed to us, we want to set up what is known as a remit to address so they know where to go out there and send the money to us. And then what we can do is we can go out there and define these approval limits. Approval limits are going to be a recommendation because of the fact that we might have to do adjustments. Maybe it's not a credit memo adjustment that we're doing. Maybe, you know what, I have Tyler, he owes us $1,000. What he did was that he sent us $990. I don't know why we didn't get the full $10. We're not expecting to do business with him ever again. It's not worth sending a small amount out to a credit card or credit collection agency, so we might want to write it off. And we may want to go ahead and have certain approvals in place so that we can do write-offs. It might be the reverse situation. He owes us $1,000 and he sent us $1,010. You know what? We don't know what for. However, what we need to do is that we want to clear out his account, and it's a small amount, and our policy might be any small residual amounts, however way you define that, we're going to go out there and do a write-off. Regardless of either scenario, we're making an adjustment, and we need to have approval limits or should have approval limits to handle those adjustments. We also want to go ahead and set up statement cycles, all right? And so basically when we are going ahead and doing statement cycles, we're looking at, we want to go out there and we're going to say, okay, we need to send Tyler a statement of what he owes us out there. All right. Other things that we have to set up are going to be things like transaction types. Now, we've got what are called transaction sources, we've got payment terms, we've got auto cash rule sets, auto match sets. Just a little back to the transaction types and to the transaction sources. Every billing invoice that comes through the system is going to have to be identified with the transaction source. So we saw the due, so that might represent the sources coming over from the due system, the sales order system. A transaction source might be projects. A transaction source might be a lockbox. So there could be a variety of transaction sources depending upon how you configure it. So every billing invoice is going to have to be associated with a transaction source, and every billing invoice has got to be associated with what is known as a transaction type. So, and of course, every billing invoice must go out there and be associated with some sort of payment terms, whether it's immediate, whether or not it's, once again, we get into the concept of installments, pay 1/3 now, 1/3 later, or 1/3 in 90 days, however you need to set the payment terms. Now, the auto cash rule sets, the auto match rule sets, these are going to go out there and help us with our receipts, particularly when you're dealing with something with a lockbox. The lockbox is usually data coming from a bank. We're going to go ahead, we're going to upload that information. And so what we want to do is we will need to have some sort of automatic definitions in place so we know how to go out there and apply the cash. Now we've got what are called an application exception rule sets out there. We can go out there, we can set up revenue scheduling rules, revenue contingencies. We've already talked a little bit about revenue contingencies already. When we go out there, we've got the rule in place that ownership does not pass over until I actually sign on the dotted line that I've received it, at which time then we have to go out there and we're expecting to be payment, and then we can go ahead and recognize the revenue. So there's a lot of different revenue contingencies that we can go out there and we can take into consideration. Another revenue contingency is that we might have a good customer, but you know, every now and then maybe we have a problem with the check that they're sending us. And so we might want to set up a revenue contingency that we don't recognize the revenue until the check actually clears. So if we have, they're talking about setting up the remit to addresses, memo lines, lock boxes, and we're going to explore all these concepts. The first one we're going to go through are what are known as my billing and my revenue receivable system options. So let me just go out there. I've probably been timed out, and I have. And just like what we saw with the payables application, they're going to go through for the next few pages. They're going to go out there and they're going to talk about every single little option that's out there. So I think it might be a little bit easier for me to just go through, bring up the form itself that we're going to be looking at, and then at that particular time talk about these options, and then you can go back through and look at the material as I'm discussing this form. So let's just come out here and look at our information. Mm-hmm. All right, let me just go ahead and modify these columns. Okay, and let's come over into defining, dun, 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 dun. Okay, let's see if we can, what am I looking for? There we go, manage my system options. How easy, I was expecting to see a folder there. And we're just waiting. Now I want to come out here and I'm going to select a business unit. And later on when we are going out there and doing some labs, we're going to go out there and we're going to go out there and populate some information for a different business unit. So let me just go out there and see if we can go ahead and do the search. Let's just come in here and start looking at some of the information that's associated with this. All right. So this is what we're doing, is that we're looking at our information here. We've got the billing and revenue side, and we've got what is known as the cash processing side. Over in here, we've got a lot of tiny little check boxes. And so if you look on your, not at your activity guide, but on your student guide, they basically start with in the middle about the print remit to addresses and the print home country. So that's where we're going to start off with. Okay. So over here, we're going to tell the system that when we're doing our invoicing, we want the system to go out there and print what is known as the remit to address, okay? We also want the system to go out there and print the home country, all right? Once again, it's all about how you want to go ahead and do the billing. Now, the next one that we have over here, this is going to be our required salesperson. For a lot of companies, what's going to happen is that your salespersons are going to get a related commission based upon the amount of business that they bring into the company. And so we can go out there and we can say, you know what, every transaction is going to require a salesperson on it. And then if the data is not sitting on that invoice, we're not going to be able to complete it. Somebody's going to have to find that missing information. Without this being activated, then the system's not going to enforce it. It's, you know what, if the salesperson's on it, fine. If the salesperson's not on it, you know, that's fine as well. We've got what is known as a split amount. Now, this split amount, basically what it's doing is that there's a report out there called Daily Sales Outstanding. And what we do is that we can go ahead and we can put in an amount. And what we're going to do is we're going to see how well we're doing our collections. And in our collections, we're going to see how good are we at collecting small amounts versus how good are we at collecting large amounts. So that's what that split amount represents. It's going to help us go ahead and manage those metrics over here. If we are offering our clients a discount, what's going to be the basis of this discount? And we're, you know what, these are business decisions. Lines only, obviously, is going to be the safest. Whether or not you can offer a discount on tax or not, you have to look at the statutory authorities. A lot of times your statutory authorities are going to say, well, you know, it's great that your business process allows you to go ahead and do a discount. However, you're not discounting the money that's owed to us. All right. So we do have these options over here, and in our system, we're basically saying we're only doing lines only out there. Now, the other thing that they have is that we've got my days and my day sales outstanding. These two go together. All right. So we're going over there and we're trying to see how well we collect low amount of outstanding transactions, delinquent accounts, and how well we go out there and collect the high delinquent accounts. And then in this report, what we're going to do is we're going to go out there and we're going to identify What's the time range when we're going to go out there and do this calculation? Next thing we're going to do is that we have what is known as a sales credit percentage limit. And so basically what's going to happen is that this is going to go out there and it's going to identify what's the maximum credit limit can a salesperson be associated on a per line basis. Once again, it's all about your strategy. It depends upon your salespeople. It depends upon how you're going to go out there and you're going to process their commissions. Over in here, what we're doing is that we're identifying by default if we're paying by credit cards, what's going to be the payment method we want to be talking about here. If we're talking about electronic funds, so basically what we're doing is we're saying, you know what, if they pay by a credit card, this is going to be the payment method. We were talking about, we have receipt classes and receipt methods. A payment method is like a receipt method, how we're going to collect the money. The EFT, once again, this is electronic funds transfer, and we're identifying what is known as our default country. Now, I do just want to do a little bit of a refresher. I see automatically here, I have a context value field on this form. That means that there's a descriptive flex field that's eligible here. Just as a review, I can come down here underneath our administration. If I want to see the name of that descriptive flex field, then remember what we can do is that we can activate this and say highlight my flex fields. And normally what we should be seeing here is I should be seeing like a little icon here to indicate the name of the flex field. So let me just go out there. Did I select the right thing? This might be something that I have to go out there and talk to our development team about. All right. Down here, this is where we're getting into some of our default accounting. So what we have is that we've got our tax account. And remember, we're setting this up globally at the what? At the business unit level. If we've got any unallocated revenue, so we've earned the money, we're just not sure how we need to go ahead and divide it out, what we can do is that we can go ahead and specify a particular account to hold that information. We can go ahead and we can tell the system if we are doing header rounding. Sometimes we might be doing some foreign currency rates. We might be going over there and doing an extension. I've got to quantity on a cost at blah, blah, blah. So we're looking at issues involving taxes, possibly the way that we're doing an extension of a calculation of a sales order. And so we might have to go out there and do some rounding. And so we're identifying the account that's going to hold that rounding. We can also tell the system to automate my journal imports that we're going to be processing out there. And what's going to happen is they're going to, if we transfer over our batches, the system is going to go ahead and just, once again, is going to initiate that journal import program for us. We've got our days per our posting cycle. And what's going to happen is that this option allows you to process the transactions you are in posting in smaller groups out there. So once again, it's just a way of going out there and just managing how we're going to go ahead and handle our importing with our transactions that we have here. Then our transactions themselves. When it comes to printing on a billing invoice, what are we going to do? Do we want to just show the total tax? Do we need to split out the different types of tax formats? Do we need to go out there, if it's European, we've got to follow a particular format that's identified over there. Documents numbering generation, right now we do not have it turned on. If you're going to do like sequential numbering, we can tell the system when to go ahead and activate that, whether or not when we save the transaction or when it gets completed. Most companies will do it at the time of completion because generally when you complete a transaction, it means that it's a valid transaction. What we can do is that when it comes over for our items, we're going over there and we're identifying the items. When we set up a billing transaction, I can reference like an item master, I can freeform, I can go ahead and reference items that are specific just to my receivables module. So we have to identify what item master we're using here. And then what's going to happen is that are we going to allow changes to printed transactions? That's a business decision that you have to make. I don't know. This is probably not a good idea. Let's just go out there and use somebody as an example. Let's just say I've got Joey. It's Friday. He receives an invoice from us for $1,500. Then on Monday, he gets the same invoice, but now it's $2,000. And there's not an audit trail to explain why he got that $500 increase there. So a lot of companies will turn that off and say, you know what, once an invoice goes out the door, we're going to go out there and we're going to say, you know what, if you have to make any changes to it, let's go ahead and make sure that we leave some sort of audible trail that makes sense to everybody. Then allow transaction deletion. You have to look at your statutory requirements. You need to look at your accounting management team. Most companies do not want to delete an invalid transaction. What we rather do is we would prefer to mark it as being invalid. Once again, it's a strategy here. If you turn on automatic numbering, not gapless numbering, but automatic numbering, then we're going to have gaps in there. If you turn on document sequential numbering, then the allowed transaction deletion is not an option for you anymore. So once again, look at your statutory requirements, your accounting management teams. I quite frequently see this as an option being turned off. Then what we're looking at here is that we're looking at my late charges, whether or not we're going to process the late charges, what's going to be our strategy on how we process the late charges, and when we process a late charge, are we going to go out there and specify a particular billing transaction type to go out there and use this. And so they're just going over here and they're saying, you know what, if you are delinquent in paying us, then we want to go out there and indicate that you're going to pay us some extra bucks on this. The other thing that you are seeing up in here, this is going to be what is known as my cash processing. All right, so we've got what is known as my auto cash rule set. All right, so if we're doing lockbox, we get a lump sum check. You're going to tell the system how you want to go ahead and match these transactions up. And then what so we're going to go out there and say, you know what, at the global level, let's go ahead and apply the money we receive to all of the oldest transactions first. And so you've got these predefined options that we can go out there and select. What makes the best sense for you is going to be the one that you're going to use at your company. I see a lot with Lockbox, they're wanting to do an invoice match. You know, if we get the payment, we want to make sure that we can match it up against the transaction here. We've got what is known as an application rule set. So what happens is we gave the example that, and it's very valid, Tyler owed us $1,000, he paid us $800 because of the fact he got some damaged goods. Now we don't have the full amount of money for the original transaction. So how do we prorate that $800? And so that application rule set is going to help us with that. The match receipt by, once again, we can tell the system, and this is getting over into my lockbox, that when we get the money, we want to try to match them against the transaction number. Okay? And what they're doing is that they're saying, you know what, here's my first option, here's my second option, here's my third option, and here's my fourth option. And so what we're trying to do is we're trying to identify how do we go out there and identify what's the appropriate money. We've got this it's a relatively new feature, in which what's going to happen is if I get a receipt, I don't know the name of the customer, or I know the name of the customer, but I don't know the invoice, how to go out there and apply it, we can go out there and we can set up the system. We can tell the system, you know what, if I choose to do so, I want to go ahead and activate what is known as the auto apply. Right? So all they're doing here is if we do chargebacks are nothing more than I'm assuming that we've been shortchanged. The original bill that I sent to Joey was $540. He sent me back $450. I think it's just a simple transposition error. So with that being said, I'm going to give him the benefit of the doubt. I'm going to set up a new billing transaction for that remaining of $90. And so we zero out the old invoice, and now we're billing back for the $90. The advantage here is really for the customer because it starts their aging process over again. Okay, do we want to go out there and identify billing locations for the receipts? Do we want to allow payment of unrelated transaction? This one, you probably want to leave it deselected as you're seeing here. Basically what this does is that as we're applying receipts, what's going to happen, I might have 1,000 customers in there. We get a receipt in there, and it's very easy to go out there and apply it against a customer that there is no relationship out there. So what we can do is we can go out there and we can deactivate this, and therefore the money can only be applied against those customers that we've identified a related relationship with. So it helps reduce potential for errors. Are we going to allow unearned discounts? We had that discussion yesterday with payables, and we said take all the discounts, whether we've earned them or not. And so basically this is going to say, you know what, if we get money from a client and it's 45 days and they took the 2% discount that they should have taken at 10 days, are we going to go ahead and accept it? All right. And do we allow a discount on a partial payment? So these are your business decisions. We've got, well, over here, we've got any application exception rules. Maybe we have to do some write-offs. Maybe we have to go out there. Here's an exception rule for when we're doing a refund. We're basically saying that it's going to be a check. So once again, we're just going over there and we're just identifying, oh, so we got some applications here. They don't follow the normal policy. How are we going to handle that? Then we've got what are known as my accounting. Here's my default accounting for the realized gains, the realized losses for exchange rates. We're identifying where do we go out there and find the exchange rate type we want to be working with. And if we've got any rounding associated with this, we need to go out there and identify that. Then we've got something called automatic receipts. This is where we've gone out there. It's and then what we can do is that we can go out there, gain receipts from a person's account. I do it with some of my utilities. I've given them the right to go ahead and dip into my account when it comes time for paying my bills.